dig a little bit more into the equity market, right? Because you talked about the dollar trade also being crowded. How crowded do you think this sort of bullish equity trade is right now?
Well, it depends on the metrics you're looking at, but what I try to pay attention to is market sentiment. And when I look at, X or social media posts and other forums, and I talk to people, I talk to a lot of retail clients for a living. And I can say that most people have gotten right back into their comfort zone and they're probably complacent, which worries me. When, during the April kerfuffle, when the market was down sharply, a lot of people were complaining. A lot of people were losing sleep. They talked to me about it. I hope that they're doing something different this time around because we're being given a mulligan. The market very rarely gives us a second chance to react to things differently. So here we are back at all-time highs. And I'm not saying the world's going to end. All I'm saying is everybody's long, everybody's bullish, everybody's too comfortable. And when you get a scenario like that, especially when we're coming up against technical resistance areas, when I look at the NASDAQ or the S&P charts on a monthly basis, we're coming right up against some pretty significant trend lines. RSI, which is the relative strength index, tells me we're overbought. But the interesting thing about the RSI is on a monthly and weekly chart, we're showing divergence. And what that means is as the futures markets are making higher highs, the RSI is making lower lows. This doesn't mean the market turns around tomorrow, but this means that this is probably an unhealthy and unsustainable rally at some point. I wish I knew exactly where that point was, but the advice I'm giving to my clients is this is a time to reassess your risk. If you were losing sleep in April, do it different this time. Maybe it means allocating different, switching from risk assets to tamer or risk off assets, or even hedging. The options and futures markets were created for hedging purposes. That's what we do for a living. There's really great ways to hedge using options. I'm going to keep it as simple as I can with a complicated strategy. You can put things together like risk reversals where you sell call options and you use the proceeds to buy put options. And what it does is it gives you the ability to make money on your portfolio up to a certain amount, but you're using the market's money to purchase your insurance just in case something goes south. So there's lots of things you can do if you're creative. Don't try to do this on your own if you don't understand it, but talk to a professional.
Carley, thanks so much. Appreciate it.
Yep. Thank you.